So, welcome to another weekly review, traders. Hope you had a nice week trading. Hope the market has been good to you. And if it hasn't, then yeah, trust me, I could feel your pain. So, before we start off for the week ahead, let's look at what happened with the previous week. So the previous weeks we saw, starting off with gold, we saw gold trading higher, higher, higher. And so silver. So when we got silver hitting an all-time high and gold hit 4,000 for the very first time in history, it started giving a little pullback here. We saw this bearish red candle here. Before yesterday, we had remember we already have a US government shutdown, and potential tentative or maybe cancellation of the NFP data. And we all know the Federal Reserve needs the data to make decisions, right, in monetary policy. So we saw Donald Trump came out yesterday and started blabbing about China. I'm sorry if I use the word blabbing. I don't care. I'm not really into politics and all that. So he came out and started saying he would increase tariffs on Chinese goods, etc., etc. And yeah, that's an very unexpected move, which took the market by surprise. And then we saw gold that a lot of people started shorting and expecting, oh, gold is going to pull back, gold is going to sell, is overbought, and gold started rallying again. So right now, we are more like not there. A lot of people have been thrown off on the market, and we saw a lot of traders piling up on call options in the options market, and also in the futures market. People became more bullish, and we all know when everyone around us is bullish, we want to be bearish, and when everyone around us is bearish, we want to be bullish, which is something that's difficult to do at times, but yeah, it's proven to be by far the best way to go, going against the crowd, right? You don't want to move with the crowd. So first things first, looking at starting with with the week ahead, we've got we're going to look at some potential catalysts for the week ahead. So what are investors going to be focusing on? Aside the US government shutdown, let's look at catalysts for the week ahead. So starting off for the week ahead, we have um, some macros. Uh, we'll have US government data may be impacted by the shutdown. Yeah. Tentative events are subject to delay, revision, or cancellation. So this is really, really a big worry for the markets, right? Very big worry. So starting for the week ahead, we have Australia monetary policy meetings, GBP, which is the British pound, the UK's average hourly earnings index. You have the climate count change. Then you have the Euro German ZEW economic sentiment. And also we have on Tuesday, which is where we have all the macros, we'll have not really any serious macro coming in, just Fed meetings and apart from the euro, which is the German ZEW economic sentiment, we have USD Powell, Fed Chair Powell will be speaking, and also Bank of England's Governor Bailey is also going to be speaking as well. Less than an hour after Jerome is done, or an hour, not even less than, probably within the same time period. Also on Wednesday, we have RBA Governor Bullock is going to be speaking as well. We have on Thursday, we have employment change for Australia, unemployment rate for Australia, which has been slowly on the rise. We have an employment rate for Australia. We have GDP for UK. We'll have core PPI, which is production price inflation. We'll have core retail sales. We'll have PPI month for month. And then we'll have retail sales and unemployment claims for the US dollar And also, we're going to have Fed members like Waller is going to be speaking. ECB President Christine Lagarde is also going to be speaking. And then Bank of Canada's Governor Mark Lem will also speak. So I think most of the data here is Fed speakers. We only have the employment change and unemployment rate for Australia and the PPI and retail sales for and unemployment claims for the US, right? So yeah, so on Friday, we don't know if we're still going to get our NFP report, tentative and might be cancelled. Um, let's look at the technicals, right? And let's see what we can derive from this. So yesterday we saw a big move down in stock equity indices, which is US 30, which I already spoke about Simon, which I said, don't chop the gun just yet. Let's wait for pullbacks. And also looking at seasonality the um for the equity indices, we know there's usually this end of the year rally that comes in around uh October. Yeah. So if we've gotten this pullback in October 10th. So anything from now to October the 20th, October 28th, we'll be looking to buy equity indices and hold on for the rest of the year. Most times we get this Santa Claus rally that comes in around December. So equity indices pulled back into our weekly demand yesterday after Trump's announcement. To be fair, I think that political event, which is a geopolitical risk, because we saw the VIX rise, I think it's just for me an opportunity to buy to get long at a discounted rate for stocks, right? A lot of people has been waiting for this pullback. We've seen this market. The overall trend has been up. So the trend, if you've been trading the trend from the 7th of April, if you've been on the right side of the trend after the whole crash from the 21st of April, yeah, you've made solid profit because the trend has been your friend. Let's see how many pullbacks we've gotten. We've got one here, and then not really any good pullback opportunities here. Not really, just 2 days pullback and we rallied again, and a few days squeeze down, and then the stocks rallied again. So every pullback really has been met with aggressive buying in the stock market, right? In the equity indices. So now we have price on the for US 30 already hit our weekly demand zone. For Nasdaq, it's almost there yet, not quite there. And then we have for the S&P 500 also potentially it's hit the wider version of our demand zone, but I would really want to see it come down a little bit into this of the zone, right? So for in order for us to get more clarity. So looking at things like the fundamentals and valuation, etc., etc., we've really also we have the German DAX here looking for pullbacks into this zone. So let's look at all these things from a daily time frame perspective now. So since we have US 30 picture weekly, let's look at the daily chart. For the daily chart, we have, and this is really skewed, but if you ask me, I'll go with this level here. So we might see if this thing pulls back deeper into this zone, maybe you might want to buy here and have your stop loss below this level, or maybe somewhere around here, but nonetheless, I would look to buy within this weekly zone. So we have equity, and let's go down to 12 hour if we can find any lower time frame entry points for us to increase our profit potential or profit margin for US 30. US 30 here on a 12-hour time frame. And for me, this zone is not really fresh. It's been kind of like touched, if you will. Let's go down to the 8 hour and get anything there. 8 hour as well. nothing really. Let's go to the 240 minutes if we can get more. Find zones there. Not, no, really, the zone has been validated. So if you want to buy this thing from a swing trader perspective, you might want to go long here and have your stop loss below this level. And maybe you can hold up until December. I don't know. So, and you can still go down to the daily to buy again if you will. Maybe you might want to go with this level. You might want to buy here and then maybe have your stop loss. And you have your stop loss below this level. All right. And you can look to hold on to that for the rest of the year. So for Nasdaq, wow, this thing dropped like crazy, 3.5%. So for me, if this is the weekly zone, right? If it comes down into this zone, there's a nice decent candle. I wouldn't want to buy here. Of course, we know it could rally due to the fact that the Nasdaq has the more tech stocks in it, and it's been benefiting from the whole tech AI, whatever you call it, technology. Now, if we get a pullback into this, that's really that. So, yeah, pullback into this level would be nice to buy. But if you're buying this thing from a weekly time frame, you can look to buy when it pulls back into body of this candle or here, and then you might have your stop loss below here and look to hold on to that for the rest of the year. So S&P 500 as well in a weekly chart have demand zones here, prices very close to our demand zone. You can look to buy when it comes here, and if it doesn't hold, then we have another level down here, right? Well, I would love to see these things come down to this zones here, which is going to give us more profit potential. Same thing for the Nasdaq, same thing for the Dow. Yeah, here too as well. Yeah, so if we see these things roll over and come all the way down to this level, wow, I would love to see that, and I'd love to buy more aggressively, if you will. So for the S&P 500, I think for me, this one has the best profit potential, right? The zones are quite small. Also, US 30 for me also looks great because it's already pulled back deep into the zone. We will look to buy here and place our stop loss here. And let's see, let's look at that from a daily time frame perspective. Looking at valuation, wow, we're currently undervalued against gold, dollar, and interest rate. Let's look at the time period from a 13-day period. We're undervalued against other three assets, right? So we could look to buy here and really have our stop loss below this lows. Just aiming for the highs alone. As a 22 risk to reward trade, if you will, come back to the highs. And if you're looking to be conservative with your stops, you just add the 33% minus a 3% rule. So you have the leverage of trailing your stop up here, having your stop loss there, and your target is almost a 1 to 4 risk to reward. You have a 3.9. So the highest you have a 1 to 4 risk to reward trade. So Nasdaq looks very, very good from a daily time frame perspective. And remember, we want to hold up until December or for the rest of the year. So let's look at December 11th. We want to hold up until December 11th. Let's look at that. December 11th. Really, you want to hold up until the 15th of December, but let's look at the 11th of December. Okay, so that should be a 1 to 5 risk to reward. So if you're risking $5, 100 bucks, you're looking to make 500 from the trade. And if you're risking 2%, you're looking to make 1,000. So, and if prices roll down all the way to this zone, wow, that's very, very nice. I'd look to buy on even on a weekly time frame and have my target all the way up until December 11th. So S&P 500 looking quite nice. I'm sorry, the Nasdaq looks quite nice, but really, if we get pullbacks into the zone, yeah, and my stop loss would be somewhere around here. Definitely being in tight with that one. This is a 1 to 2 risk to reward trade. But if you're looking to hold up until December the 11th, December 12th, yeah, you're gonna have a 1 to 3 risk to reward profit margin for the Nasdaq. If we see on Monday, if it dips into this zone and then carries on, yeah, that would be nice. But S&P 500 as well, we're very, very close to this zone, which is our weekly time frame demand zone. So if it comes down to this point here, it could rally from here probably. I want to see it dip into this zone. Now, if it comes into this zone here, I'll just go with the weekly zone selected. We want to hold up until uh December 10th. So we would aim for a 1 to 4. Yeah, easily. I think this thing can easily do a 1 to 4 risk to reward on a trade. So here now is you have to pick your poison. Should you want to go with the Nasdaq? Do you want to go with S&P 500? If you want to go with the Nasdaq, you can equally aim for a 1 to 3 because remember I said institutions favors the Nasdaq more than the rest of the equities and US 30, which is the Dow. So if you want to go with this, nice 1 to 4. You want to go with this. I think this has the best profit margin amongst all. You could do a nice 1 to 5 here. Also, let's look at the German DAX. DAX looks very nice. Very nice. We have a demand zone here. Now, we don't really want to see Europe underperform a lot by a lot. So I'll just go with the main zone here. Yeah. And I have my stop loss below the 3% rule or at the 3%. Then aiming for the high should give us, yeah, 1 to 3 risk reward ratio. So if the German DAX pulls back into that level, really you want to buy and hold. Now, if you're looking for 1 to 3 easy, and if you're looking for it to make higher highs, 1 to 4 risk to reward ratio, you could do that as well. Remember, we're trading with the trend, right? USDJPY. Looks like we're coming back to fill this zone. To fill the gap, sorry, let me turn off the uh seasonality. So really, pull back into this gap, and if we hit any of the demand zone, I could look to flip bullish here. I could look to flip bullish here because if we see either way, we could just trade at demand, right? Because we've seen good macros coming from the dollar, but I don't know how Trump, if his new tariff imposing tariffs, increasing the tariffs on China it's really going to affect the dollar. But we've seen from records that it's not really been favorable for the US dollar. I was really looking for pullbacks into the weekly zone for USD CHF, but from the way I see it, looks like we're coming all the way down here till we hit next year's uh midterm election cycle. So we're currently in an election year seasonality, which is most times stronger than the normal seasonality. So we're in a post-election year. and we've seen most of our analysis play out according to the election year seasonality. So here, this is the euro dollar. I was really looking for. We're more like in a sideways trend here. We've not really been putting in lower high. This, for me, we're still within the uptrend, right? From a higher time frame perspective. So really, if we come to 172, yeah, I could want to see us pull back. But if we come to this level, ultimately, I'd be very satisfied to buy and actually follow the trend. For now, I've looked to buy and hold for a 1 to 3 risk to reward ratio. If we get a pullback down into that level for a 1 to 3, I could easily do that, right? For Bitcoin, BTC, crypto, yeah, we saw this massive move down. So it's looking at valuation, we're almost undervalued against dollar, gold, and interest rate. So if we see this candle comes down here to really fill this long week, and we get an undervalued reading within this zone, yeah, I could look to buy. And even if we come down to this zone, I could look to buy and aim for new highs to be made. Same thing for Ethereum. If we come down to fill this week a bit, we're still into this zone, I will look to buy Ethereum. Um, yeah, Solana looks very nice to snap some buys if we get pullbacks into this zone. Nothing really to say here for Bitcoin Cash. Litecoin, ooh, came down into the monthly demand, and it really rejected. Yeah. XRP, same thing. Dogecoin, yeah, monthly demand as well. Really, the cryptos I would look to snap some buys on is Bitcoin and Ethereum, right? Ethereum has showed, let's see which one is more. So Bitcoin made, wow, snapped two lows there. Ethereum comparatively looks a bit stronger than Bitcoin, so I would look to add some buys if we get pullbacks into those levels. So yeah, that's it for me for crypto. And monthly outlook, oh sorry, weekly outlook, if you would call it. So we should be more focused on buying equity indices. How is it the Dow you want to buy? Is it the US 30 or is it the S&P 500? Or is it BTC or Ethereum you want to buy? Really, I don't have any analysis on gold right now, but maybe um we'll repeat the same thing we did last week. We traded for time frame window of opportunities. Like the one we did here, then we easily made a 1 to 5 is to reward ratio trade here. Also, we've seen prices come down a bit now. I don't know, we're kind of like in a sideways trend here. So really nothing for me for gold. Yeah, so my analysis would be Dow, um, the Nasdaq, and the S&P 500. Also, the German DAX, remember I said looks very, very good for buys. If we get pullbacks into the zone, I would expect us to see a highs being made. So yeah, that's it, guys. Let's see how it goes next week. So let me stop the recording and